Hello, welcome to the stock market weekend review. It's April 2nd, 2023. The first quarter is in the bag. They would say it should be a good quarter for most people unless you short the market. But decent quarter. I did. Nothing to complain here. Definitely a decent quarter. I hope everybody did well as well. But what's next? Right, so we had a lot of window dressing that went on last week. We had first quarter ending. Um, this has been a market of buy the dips, sell the rips, right? Definitely not something to get too bullish on or too bearish on. I have been pretty much neutral as far as my view on the market. Sure, I think we are in a path of a recession in a down market, but it's still a good trading environment if you buy the right stock, trade the right stock, buy the dips, sell the rips, avoid the minefield. Now the earnings season is coming up next week. Definitely a time to be cautious. My strategy for much of last year is going to be the same for this year. What does that mean? If I have a stock that are running hot into earning, by that I mean running up 10, 20, 25% into earning, I'm definitely selling before the news come out. Okay, because usually when you see something like that, the good news is already baked into the stock. People already anticipating, front running the earning. So be careful. Okay, if you have a stock that went up 10 to 25% into the print, into the earning report, at least trim your position. No matter what, trim a little bit, because if they come out and miss earning, you're gonna get crushed. That is the kind of environment that we had all of last year. So don't sit on your hands when you have a stock that is running hot into earning, right? Definitely don't FOMO, don't chase into the pump thinking that they're gonna beat earning and the stocks are gonna go higher. Sure, there will always be exception to the rule. There always can be a company that come out with even bigger earning beats than expectation and the stock can ramp higher. If that's the case, sell on the pop on earning, right? Never sit on your hand when you have a big gap up. Sell some. That's a strategy. Okay, let's take a look at some indices before we move on to individual stock. Right now, the SPY had a good quarter, but I think we are at a level of resistance. All right, so be mindful here. What a great week, right? Look at that. Gotta like that path. In fact, all of March has been pretty good, except for the first 10 days, right? The first 10 days was pretty ugly, and then it ramped back up. So yeah, we're at this level where I think it's gonna be the the risk reward right now is not chasing into the S&P 500. If you're in it, for sure, set your stop. But I would be adding money into the SPY here because I think it is topish, right? It's at the level where you might see, sure, what's the upside? Is the upside up here? Yeah. So you're talking what? 3.5, 4% ish. All right. So yeah, there is a 4% upside into earning. Okay. So, but I think once earning come out and you see a whole bunch of disappointment or guidance down, which is more likely what I think is going to be in store for a lot of big company, is they're going to guide down because the consumer the last month had been pretty scared with the bank crisis. A lot of people pull backs. A lot of banks pull back on lending. So you're gonna see some weakness there in guidance. All right. So I'm not gonna be very bullish on this earnings season. So avoid the minefield. So for now, I think the risk reward is pretty much balanced right here. Can you retreat 2.5, 3% down? Yeah. upside 3 to 4%. Yeah, it's definitely, if you have it, raise your stop. QQQ, pretty topish here as well. Look at that. QQQ, what a path, right? Fantastic first quarter. Look at where the year end right down here at 263, 264. Big run up. Okay, big. Can it keep on going higher? I don't know. I am kind of on a camp that I don't think it's gonna go much higher, but we'll see. Let's see. Where is the level of resistance? Is there a level of resistance that we can draw the chart? Let's take a look. How high can this go? Let's do this. You can draw the chart in a couple different spots, but let's do this one and see if it makes sense. Does it make sense? Kind of, right? Not a big fan of that chart, so let's not a big fan of that line. Let's remove that. Yeah, there's not really upward trend that I can see, or even a channel. It's close, but I wouldn't be drawing any kind of channel right here. I don't think it's defined yet, a well-defined line yet. But as far as resistance for the QQQ, up here, right? Oops, my bad. Let's go back. Up here, the 327, basically 2% ish above. So can it run? Yeah, it's near a gap. Okay, let's take a look. Let's take a look. Is there a gap? Yeah, there's a gap right here. It's near a gap. Okay, there is a gap. It's almost got there at 322. So you have a gap. We can close that gap fairly early Monday, tomorrow, and then see how it does. If it doesn't get the sell-off, which I think likely it will keep on going, it might be close the gap, fill the gap, and then go up to that 326, 327, and then perhaps top out at 333. Yeah, I can see that. I can see potentially, depend on the earnings season, can I see it can run hot? Once again, if you have it, raise your stop. But I would definitely look to trim on the gap fill if you want some. Be disciplined, trim at the gap, and perhaps go to the dark side and go bearish and sell puts, buy puts up here. I think that could be the right play. Is if you long, trim on the way up and start to go on the opposite side up there, because I don't think, what would be the reason for the Nasdaq to break that? Is earnings going to be better going forward there than what it was a year ago, 9 months ago? I don't know. I don't think so. We'll see. Hard to say. TLT, I am still long all the TLT that I bought. Once TLT get down to 105 and 104 level, I add a lot. I sell a lot of puts. Right now I have, I believe, a couple cover calls as well as a put. For me, I will keep adding. If I see 105 and below, I would definitely sell 104 and below puts. If I see 106 and above, I'll be selling. Last week I sold 109, 109.5, and 110 cover calls, and all those expired worthless. And this week so far, I sold a 107.5 cover call, a 108 cover calls. I would definitely hold back on selling any more. If I see anything near 107, I'd be selling 110 cover calls. But I think TLT is going to be in a tight range for the next few weeks until, of course, the next Fed, which I think most likely will be a pause. I think the downside for TLT is somewhere in the 103 area. I don't see TLT, below 102.6 where the gap fill is. To me, if for whatever reason TLT retreat back to that level, I will go in big. Okay, I have about I would say 1/3 of my position I want to have into the rate cut, so I have a lot more room to add. So yeah, if TLT get down there, if, for me, if TLT get down to the 100 MA at 103, 104-ish, I'd be selling a lot of naked puts at the 102.5 level because I welcome it to come down and assign those shares to me at a discount. I take it. All right, and last but not least, the Dow Jones, same thing here. You're at the level where you should be trimming. Absolutely, you should be trimming into the 100 MA, and can it run up to the 540 level, 542? Yeah, it's been there before. It can run, right? I wouldn't be chasing it. If you have it, raise your stop and trim on the way up. Earnings season is here. A lot of craziness is gonna happen. I usually like to hold a lot of cash into earning because there's a lot of good opportunity to buy good company that come out with good earnings, good guidance, and didn't run up into that kind of numbers, and the stock sell off on the news. No brainer to buy. Okay, no brainer to buy. So okay, let's run right into it. Individual stock now. Let's start out with the banks. I like Bank America. Still like Bank America, right? I think I would like to buy the dips this week. Wait for the 20 to come down, and I think if you can see a break over the 20, I think you can see a quick 10% move. All right. So to me, I would like to add on any dips closer to 28. I might double down and then take the 10% pop when it vault over the 20 MA. I think earnings for the big banks like Bank of America, JP Morgan is going to be fantastic. I think their earning is going to be solid. I like it. Goldman Sachs, you get the break over the 20, right? I have some Goldman Sachs. I like it. I would buy on dips. I would add on dips to the 20 MA because I think there's a 5% move here from 337 to 337. There is a 5% move into earnings. Yeah, I like it. I like it here. The risk reward is definitely in going long or add to my position on Goldman Sachs here. About JPM, I don't have anything on JPM, but if you like to get if you want to buy into JPM, I think you can. Okay, if it trades sideways for a couple days, and then you see the 20 MA come down, I think it's going to be a violent move. I think a lot of the banks have very similar charts. Okay, you can see a violent move, 5% up on a lot of banks. If you bought into the KRE, I like the KRE here. It has stabilized. It has fine support. I have no position in KRE, none. But I wouldn't mind adding here the regional banks. I think there could be a violent move, a lot more than 5%. Okay, I think the move here could be 15% or even more into the 50 MA, wherever that is. So I think there is a 20% move potentially in the next week or two when all the regional come out and the earning is going to be pretty solid. Yeah, instead of trying to buy individual regional banks, I think KRE down here is a nibble. If you want to play it safe, sell puts at the 42, down to like 41, 42. But yeah, I like it. I like it here. Into earning. Let's take a look at big box retailer. Costco. I like Costco, but not here. Not here. All right. So for now, it's a no touch for me. If Costco get anywhere into the 480s, 485, I would like it. I probably won't add share outright. I'd be selling put where 475. 475, 465 put spread. Yeah, if it's dumped even lower, then I would do 460, 440 put spread down here. But right now, it's a no touch for me as far as Costco. If you have it, I would say trim. As you can see, this area, this 2-day moving average has been a spot that it can't break. It might not be able to break it into earning. I don't think Costco earning is going to be fantastic. I think growth is slowing. That's why you see this kind of downward trend. The big growth, the hyper growth in Costco is over. Okay, the pandemic fuel growth is over. That's why you see this trend down, right? So I like Costco, but long here is not, the risk reward is not. Okay, what is the reason for Costco to have booming sales or bigger growth rate than they have experienced in the last 3 years? Nothing. Okay, nothing. Target I like more, but it is at the level of resistance. Okay, is it a surprise that they pop it up into resistance and stop right there? No, not random. For me right now, the risk reward is not be in target either. On a pullback below 160, I'll be selling put at 155. Okay, that's a great play. I've been doing that a few times and it has worked the last couple of weeks. I don't mind getting the share assigned below 155. I like target here, but not right now. No position. I have no position in any big box retailer. No Costco, no Walmart, no Target. Same thing here. Walmart at the level of resistance, right? If you have it, trim it. Set your stop, because I think the path of least resistance for Walmart is down here. Anything below 141, I'm buying in this range, 140 to 141. I would sell puts down at the 137 level. That's easy. Any kind of dump, market sell-off, negative sentiment, there'll be opportunity down here. Just be patient. It will come down, all right? Always trying to be patient. All right, let's take a look at Pharma. Eli Lilly, looking good. If you bought into Eli Lilly on the dump early March, congratulations, nice ride. I have trimmed some, 10%. I trimmed 10% so far, so I got plenty left in the tank. Where would I sell next? Up here. See, I set my alarm right here. Yes, 347. Anything above 347, I'm trimming at least 1/3 of my remaining position. And then, of course, trim more at 354 and above, right? Yeah. Nice run. How about Pfizer? Finally stabilizing. Yeah. Looking good. Where would I trim? 41. The 50 MA is a must trim, okay? It was an ugly ride down to 39 level, but it's a must trim up here. Who knows if it can break it? If it does, look for 45, 46 to exit fully, okay? My plan is trim some at 41, 42 level, and then looking to fully exit in the 45, 46 level up there. I'd be okay with the small gain with that move, and move to the sideline. Okay. What other? AbbVie? I have nothing in AbbVie. It's gonna kind of top the share until it go down. Okay. For me, if it come down to the channel, which is like 356, 156, it might be worth selling puts at 153 and below. But for me right now, the risk reward is not in AbbVie. I just don't see a compelling reason to buy into AbbVie here, even though I like it. No position. J&J, which I like, right? I talk about J&J. It's doing it. It's doing the move over the 20. I talked about it last week, right? Yeah. If you had J&J, trim some at 157 and 158 in that range. Okay. Trim some. And then, of course, aim for up there, 166. But it's paying off. JSK, same thing. I like JSK here. Okay. This is nice. This is nice. All right. So you have a pretty decent move over all this moving average confluence right here. I like JSK here. Out of all the pharma, I think this could be the breakout that if you long JSK, it's been painful for the last 3.5, 4 months to see the big pop retreat and go sideways pretty much. But I think if it can hold here, right, it can run up to the 38, 39 level for sure. Have your target to trim some above 37.5 into 38. Yeah, don't be greedy, right? I trimmed at the 38-ish level last time, and that was the right move. But to me, the end move is in the 39. Anything in the 39 to 40 range, the gap fill, you want to take a big chunk of the profit, right? That's what I would do. If there's any kind of pop into 39, 40 level, I'm selling at least half of my position and take the gain. XBI, I have one put there. The risk reward is to be long here in the 76, 75 level. I think it's okay. See this level? Sure. Can it break below? Yeah, it can. But to me right now, the risk reward is to be long for the move to 82, right? Tight range, but I like it. Amgen, same thing like J&J, right? I talk about Amgen. I like it down here. Sure enough, breaking the 20, moving, holding the 50. If this can hold, if you have it up there, 250, okay, that's your move. It works. Now, as far as the other stuff that I like, well, right now, if you have Biogen, it's time to trim. It's time to go up here in between 282 and 290. You should be trimming and get the F out, right? Don't be greedy. Last one, as far as pharma, Gilead, same thing here. If you have it, look to trim 83, 84-ish, right? And then hopefully if you get 87, 88, get the F out, right? The last two times it got there, it sell off. So is the third time going to be any different? No. All right, let's take a look at big tech. Google, looking good, looking good. Last time it got to the 200 MA, it sell off. This time it's bouncing, it's holding, okay? I haven't trimmed any of my Google, have not. I regret not trimming here. Well, I trim a little bit, and then I add back, and then of course I suffer the downdraft, and then I had not trimmed this time. I like Google here, okay? I think Google have a lot of room to cut as far as expenses. Unlike Meta, Google is lagging in that department, and I think they will wake up and do the right thing. And when they do that, you're gonna see the move into this area here in the 114, 115. That's what I want to see. That's where I would like to trim a little bit in the 114, 115 range. It's in the move if they announce another 5 to 10,000 layoff, which I believe will come. Just look at Meta. Meta has been ahead of the game since last year. Look at this beautiful move from 88. Wow, right? Wow. Yeah. If you have Meta, I think 222 is an area of trimming between 222 and the 52-week high of 237 to the that area up there. I will be trimming probably at least a quarter of my remaining share up here between 222 and 236, 237. Yes, that's the place to trim. And raise my stop. I have raised my stop to where? 197. Okay, low of day, whatever the low of day here, I would raise it to 197.9. Too much gain in here to not lock in the gain. So right now my stop is right there. And depend on where it moves, I might raise it up higher. But for now, it is 197.9 is my stop on Meta. Amazon, more room to cut there as well. I've been selling puts here and there on Amazon, but right now I have no share. And can I see Amazon? If you have it, trim at 107, right? Trim. Last time it got here, pretty resounding rejection, so it can happen again. Look, the 200-day moving average has been the area that Amazon struggled 3 times now. Okay, is the fourth time going to be different? Maybe if they lay off another 5 to 15,000 people, which they can easily, but it needs to have that kind of catalyst, because I don't see them having busting number as far as earning. I don't see it. What makes you think Amazon earnings going to be good compared year over year? No, it's not going to be good. Apple, nice move, right? Wow. But it at the area of resistance. If you have it, it's time to go. Look, 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 look. Okay, it's time to go. At the least, raise your stop. Low of day Friday, yes, please do so, because I think it is toppy, very toppy, right? So don't be greedy. Look, this has been a tough resistance here. See, boom, 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 3 times already. Fourth time, it's there. If it breaks, sure, it will be a bullish move. But what is the reason for Amazon to be so bullish? Is consumers so strong? iPhone order is busting out. What is the reason? Is Amazon? Oh, no, I mean Apple. What make you think Apple's gonna have a fantastic numbers coming into this quarter? I don't know. I could be wrong, but I think the consumer is gonna be weak, and sales gonna be weak across the board on many consumer discretionary spending, and I just don't see the kind of number that will allow Apple to break out. But if it does, there are rooms. Okay, there's room to run to 175 if it happened. But for me right now, it is a sell. Let's take a look at Tesla, since we are into tech. Tesla, if you have it, looking to trim up there, 213, 214. Okay, it's been here before. It's near the top range of the recent high. So, and the 200-day moving average is right there. So if you have it, put it in order to sell. 213, 214 up there. So any kind of wick move up there, you take some profit. I was looking to sell puts last week when Tesla was doing this. I was looking to sell puts, but it's just not enough juice down here. My order just never took. I was trying to sell put in the 175, 170 put spread. It just didn't happen. That's okay. No need to chase. Let's take a look at diagnostic. Okay, Apptronik. I talk about this. I try all week, and I keep missing it. Okay, all week long I try to buy share, add share, sell puts, and then of course I miss it. I have a decent, a small position, but it did what I thought it would do. Break out on 120. Where would I trim? 103, 105. Okay, but I like Apptronik. On a pullback, on any pullback into the 20 MA, I'm buying and selling puts. Medtronic, which I also like. I would like to add here, okay, on pullbacks and the 20, if the 20 hold and pullback 78, 79, I'm adding. I think there's a move. There could be a decent move if it can have decent earning, but I need to see the strength and holding here because I think it can get up there, okay, in the 84 range. There is a 4 or 5% move into Medtronic into earning. The one I like, of course, is EW. All that downgrade, guess what? Didn't work. EW, I trimmed some. I trimmed some, and I still have a decent size position, and I'm holding to trim more in the 84 range. I will. Up there, I will. Right? It would be silly not to sell up there because it's been here before. Right? Look, last time it got into the 84, 85 range, sharp rejection. Look, earning, they have decent earning. It pops, and then it give it all back and went sideways for the last month. So anything above 84, I will look to trim for sure into the 200-day moving average. I trimmed some last time, but not as much as I should have. Okay, why? Why is that a key spot? Look, it's the gap fill, right? Look, this gap fill has been pretty ugly. Sellers was lining up on the gap fill to exit because why? It's been an ugly ride from up here. Okay, so this is one ugly ride of 1, 2, 3, 4, 6 months of an ugly ride for a lot of people. And then when they got a chance to move on, they did in big sizes. So it knocked the stock down. So we'll see. We'll see if all the sellers from the first 6 months are done so that now it can break out. Okay, so I still like it. I will trim more, maybe like a third of my position up there, but there could be a big move ahead for EW as well. ISRG, if you have it, you should be trimming. Okay, set your stop. I like this one the least out of many of the diagnostic that I own because it's at the level where the risk reward is not to go long here. Okay, I just I have no position. Would I buy down here? Yeah, but it need to come down. Okay, it need to come down. Let's take a look at energy. USO. It's time to go. Okay, it is time to go. If you have USO, which I have been trading, I've been selling puts here and there, it's time to go. If you want to go long, wait until it pull back into the 20 MA and then sell puts. If it come back down here into the 63 range, then you can sell put at 61 and below. That's a safer play, okay? Sure, can I get down to 57, 58? Yeah. But for me, the energy trade, I don't care what people say, it's been pretty poor the past year, right? Everyone has been so bullish on energy for the past year. Not me. I have traded energy and did well. No need to go long on that. LNG, energy, if you have it, it's time to go. Okay, it's time to go on LNG for sure. Same thing with CTRA. Okay, it's time to go. It's at the level of resistance. There is a little bit move. It's another buck, but trust me, you don't want to be, uh, you know, holding and staying long up here. What's the reason to be bullish here? Not much. Okay, if you buy CTRA as a trade, look to exit. At least set your stop at the 20 MA because if this give, you can give back 10% in a hurry, like this ugly gap down, right? So be careful. I'm not bullish on energy. Let's see, what sector do I talk about? But nothing. UPS, it's time to go, right? It's time to go. If you have UPS, I talk about that. I'm not long. I'm not looking to stay long or buy in anything. I'm just watching. UPS, if you have it, raise your stop. FedEx, it make that big move. I said, nope, not buying, not chasing, and it's back to the resistance. Into earning, nah. Well, it already have earnings, so earning seasons is here. If a lot of company guide down because consumer is weak, you think FedEx is gonna hold up? No. If consumer is weak and spend less money, less shipping, Amazon, all that stuff, you're gonna see all the transport come down. I talked about CSX as my play last week, right? It pay off if you buy into CSX. I like it. I like it here. But look to get out in the, up there, 30.4, all right? If you buy down here last week, good on you. I like CSX last week. Now it's time to take profit. JBHT, same thing. I said it last week. I like it down here, but it's time to trim, right? Can it move into the 180 range? Yeah, but it's time to go. If you have it here, you should start trimming into 180, 182 and exit up there. At the least, take out, at least half your position up here. And then if it move even higher, get out up there, okay? It's easy. The chart tell you exactly what you can do with JBXT. Before I go, let's take a look at one of my favorite trading stock, which I still have some. Martin Marietta, yeah, I like it. Well, I love it down here. To me, this sell-off into the 320 level, silly, but you gotta stay with the process, right? Trend support, bang, bang, bang. So guess what? I would trim into 360, channel high or up here. Maybe that would be wishful thinking, but any pullback into 321 level going forward into this trend line, you bet, right? You bet. Buy some. VMC, this one is a little bit more attractive as far as risk reward, so I wouldn't mind adding into the 20 MA on any kind of pullback into 168. Yeah, I would buy some. I have no position here, but I think this might be a better play for now to add, if you want to add into this sector, VMC, because there is a nice 5% move up here. If you can buy on in the 170-ish level, yeah, I like it. I like it a lot. Before I go, DGX, it's time to go. I like DGX, right? I talk about that all the time. Time to buy was here. Time to sell is now, right? It's clear. The 50 MA is rejection, 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 rejection. It's here. Trim some. If you have some, for sure, get the F out up here at 145.5, right? I like LH more, LabCorp. Nice move. And for sure, look to get out 234, 237, okay, in that range. You gotta sell. It was patiently wait for it to come down, and now it's time to look to trim. And that's it for this weekend review. Earnings coming up, so be careful. Don't be FOMOing into anything that you think earning is going to be spectacular. I don't see any kind of spectacular earning for many companies. Oh, one sector that I forgot. Let's do it. Staple, Coke. I still have some, but it is near the level of trimming, right? If I see 63 and above, 63 and 64, you betcha, I'll be trimming. I'm out of Pepsi. I'm out of Pepsi. If you have Pepsi, raise your stop. Okay, raise your stop. It's ramping. This is the kind of thing I'm talking about. When you see something that's ramping into earning, can it go another $4 or $5? Yeah. Is 2 or 3% move in the card? Yeah. But the risk reward is you got 2 or 3% on the upside and a lot more on the downside. Okay, to me, if there's pullback, selling put at 170 is a no-brainer, right? Down here. But for now, I just don't see a reason to be in Pepsi. I have not been in Mondelez. It's a stronger one. Look at this. Mondelez. Wow. Okay. I was waiting to buy Mondelez on a pullback like Pepsi and Coke. It did not come down. It stayed strong and stayed stronger. Wow. Okay. But it's time to go. If you have Mondelez, congratulations. It's time to go. There is very little compelling reason to be long now. Okay. It at that area. Look, it been here last year, a year ago, well, January, over a year ago, it been up there. So it broke that, right? But what's the reason? What's the reason for Mondelez to go higher? I don't know. To me, the risk reward is down here. Okay. I need to see low 60s to want to buy back into Mondelez. For now, it's a no touch. STZ, which I like. I have my position there. It was annoying. Sure, I buy down here, I trim some, and then this is nonsense. This ugly move was nonsense, but if you buy more STZ, congratulations, nice move. Where can it go? I would trim at 230. Okay? I think the risk reward is stay long on STZ into earning. If I see 234, you betcha, I'm selling. Okay, look, the last time it get up there, 234, you got the sharp rejection. So now the two-day moving average is going to come down right where the top was last time. So in the 233 to 234 area, I would be trimming a lot into that area because it fooled me once, right? It fooled me once. I'm not going to get fooled twice. So I'm holding it. I like it here. On a pullback to 222, I might even add, right? I definitely would sell put in the 215, 200 put spread kind of thing, but it's weak compared to Bud. Bud, look at this. Wow. Okay. I have been out of Bud since 61, 62, right? That was an area that was the right thing to do. But then, wow. Okay. What's going on here? Wow. Right? You got to be impressed if you have Bud. I would say look for 70. What a move. Wow. Okay. I like Bud, but it's pretty toppy here. Raise your stop, right? Raise your stop. At the least, use low of day, Thursday, as your stop. That's too much money, too much gain to be left behind, but impressive. Impressive, okay? Gotta be impressed with the way Bud has moved. Wow, okay? It was ugly. You know me, I talked about Bud last year on this channel low here for a long time. But I'm all out. If you have it, 70 is your spot to get out, right? You should at least trim up there. And that's it for this week. Thank you for watching. Later.